When you first buy a home, one of the most important decisions you will make is your mortgage rate. It's a decision that will affect a homeowner for years to come and could be the difference in thousands of dollars of interest payments to your lender. With interest rates at an all-time low and discussions by the Bank of Canada on when to increase interest rates, are you better off locking in a fixed rate or leaning towards a variable rate mortgage? First, let's summarize the differences between the two choices. Fixed rate mortgage. A fixed rate mortgage locks your rate into place for a period of time, usually 3 to 5 years. The rate is typically higher than a variable rate mortgage, but provides for a stable, consistent mortgage payment during your term. If you break the mortgage, there's often a penalty called an interest rate differential penalty, usually the remaining interest on your mortgage term. This penalty can lead to thousands of dollars in fees for exiting your mortgage before the term is complete. Also, it is not possible to switch a fixed rate into a variable rate without breaking the mortgage. Variable rate mortgage. In a variable rate mortgage, the rate changes over time, with decisions from the Bank of Canada. The rate is determined using a discount off the prime rate. For example, if the prime rate is 2.45%, and your lender is offering a variable rate at a prime minus 1.2%, your variable rate will be 1.25%. The variable rate is typically lower than a fixed rate, but can also float higher for some periods. If you break the mortgage on a variable rate, the penalty is typically far lower, usually 3 months of interest payments. Lastly, you can lock a variable rate into a fixed rate at any time without breaking the mortgage. Now that you have an idea of the differences between fixed and variable rates, which one is better? A 2001 report completed by Moshe Milevsky, professor of finance at York University Schulich School of Business, showed that variable rate mortgages beat 5-year fixed rates 70 to 90% of the time. Moshe used data from the years 1950 to 2000, and the study includes a period of high market volatility in the 1980s and 1990s when mortgage rates were much higher than they are currently. As the effects of COVID continue to take their toll on the Canadian economy, it is likely that it will take several years for the economy to stabilize, then begin to grow again. During this time, interest rates have been kept low, and when interest rates are lowered and kept low, this lowers the cost of borrowing, which does two main things. One, it reduces what borrowers need to spend on interest, so borrowers can have more money to spend on things in the economy. And two, it makes borrowing money more attractive, so people borrow more and spend more with this borrowed money, and this boosts the economy. In the words of Moshe Milevsky, when interest rates are at low levels, one is better off locking in at long-term rates. In other words, Moshe suggests that variable rates are the better choice, but locking into a fixed rate mortgage at the right time is ultimately the goal. The question becomes, when is the right time? And that depends on your circumstances and risk tolerance. CIBC predicts that the Bank of Canada's overnight rate, currently at 0.25%, will see 5 rate hikes by the end of 2023, taking the overnight rate to 1.25%. If you're on a variable rate mortgage, this does not mean that your rate will increase by that amount, but it does mean that between now and then, you can expect your rate to increase. If you don't have the risk tolerance to stomach a few increases in your mortgage rate, you may be better off locking in a fixed rate mortgage over the next 3 to 5 years. Whatever decision you make, be sure to discuss it with your bank or mortgage broker, review your options carefully, and make the best choice for you. My name is Jeff Ajamai, real estate broker with Home Life Miracle Realty and founder of House of Trade. Let us know what other content you would like to see by commenting down below. For more content like this, like, share, and subscribe to our YouTube channel, and follow House of Trade on Instagram at House of Trade Inc.